All right, folks, I want to give you some good news that you're going to find very welcoming, whether you're buying a home, you're refinancing, getting a HELOC, or maybe you're thinking about buying a house at some point this year. Who knows, right? And that is that mortgage rates are coming down and we are looking at some of the lowest rates of the last 5 months. Now, in this video, guys, I'm going to tell you what's going on with interest rates, why they're coming down, and what I believe we will be looking towards in the spring market and into the summer market this year, as well as a couple of forecasts in the mortgage industry. As of Monday 3rd, 2025, with the 30-year fixed benchmark now at 6.76, that's nearly 20 points lower than what it was last week, offering a welcome relief for spring home buyers looking for affordable financing over the peak real estate season. Now, I want to go ahead and put this into perspective so that you guys can see how much this means. The same time, just 2 weeks ago, actually not even 2 weeks ago, about 12 days ago, the average interest rate in the country was 7.13% on a regular 30-year fixed mortgage, which means that if you were looking to get a $500,000 mortgage, you will be looking at paying roughly about $33.70 a month. Now, you fast forward 12 days later to today, 13 days now, the average interest rate has dropped to about 6.76, which is, in the housing market, you got to understand that this is a huge difference because that same $500,000 mortgage equates to roughly a $3,246 a month payment, or roughly $124 less. Okay, so why are we seeing these lower interest rates? I want you guys to know about this because it's important for you to understand. So investors have started moving their money from riskier assets such as stocks, crypto, into more safer investments like bonds, because mainly there are signs that the recession may have started or is about to start. There's a lot of uncertainty in the economy right now, especially with the tariffs war. Right now, Wall Street is shifting kind of their focus from inflation, which, as you all know, it kind of played this for the last 4 years on basically now the impact of what tariffs are going to do to economic growth. Now, remember that we had runaway inflation from 2021 through 2024. And even though inflation is still not within the parameters that the Federal Reserve wants, they want to get into that 3% target inflation, it is apparent that the rate of inflation is slowing down. And when inflation goes up, the yields on bonds also go up, which also pushes up mortgage interest rates higher, which is basically what happened over the last 3 years. Now, according to the most recent data released by the New York Fed, this is as of February 2025, they predicted that there is a 23% chance of a recession in the next 12 months. And the Atlanta Fed has recently updated their GDP forecast to negative 2.8% in the first quarter of this year. Now, I want you guys to also take a look at some data since President Trump took office. The S&P is now down by 4%, about 4.4%. The NASDAQ is down by 7.1%. Bitcoin is in a bear market territory, down by about 18.4%. And likewise, the 10-year treasury yield is also down by 6.7%. And obviously, subsequently, you guys are seeing now mortgage rates are down by roughly about 4.8%. As far as mortgage rates go, we are seeing conventional rates available as low as 5.875, 5.99% with discount points, FHA purchase rates in the low fives, same thing with VA rates in the low to mid fives, jumbo mortgage rates available in the low 6% rates. Now, all of these rates that I'm showing you guys here, this is from a piece of software that we mortgage brokers have access to, and they don't include any margins. They're kind of wholesale rates, and they do have some discount points. But I just want you to see that these rates are now available on a lot of pricing sheets of different mortgage lenders. So the rates have definitely come down by quite a lot. Now, if you're a homeowner, you need to be paying attention to what these rates today mean, because in the terms of refinancing, especially if you took out a mortgage over the last 8 months or in the last 3 years, and you probably just missed the really small drop in interest rates back in September of last year when it kind of lasted for about a week or so. Now, if you're a home buyer, depending on your local market where you live, you are obviously not looking at 20-year high in interest rates anymore, which is obviously fantastic, right? But also you may be looking at getting a really good deal on a house, or at least you're likely to have the upper hand over a lot of sellers. For example, I I work primarily out of the Atlanta real estate market. This is where my company is located. We do loans in Florida as well. And our two markets here in Georgia and in Florida, the housing market has definitely slowed down. And we are seeing a lot of our clients get pretty decent deals when they're negotiating with sellers. Okay, guys, so what do I really see happening right now in the spring and in the summer market coming up? Well, first of all, typically these are the busiest seasons with home buying activity. So over the last 4 years, the demand for homes was there. Prices hit an all-time high, really when rates even hit up 20-year highs. So the demand was there already. We need to really see what's going to happen with the labor market and other market data that's going to be coming out in March, because if that data comes out at expectations or below, we will probably see the Fed reducing the baseline interest rate a little bit further. Right now, the Fed funds rate stands at roughly 4.25% to 4.5%. Now, last year, they announced that they will only be cutting rates just only about 2 or 3 times. And when they made that announcement, interest rates went up because it kind of signaled to investors that they were not willing to cut interest rates a lot more. Now, I am willing to say that it could be as much as 4 times if the country goes into a recession by either the first quarter or second quarter of this year. But we don't necessarily need the Fed to cut interest rates so that mortgage rates can go lower. And here's something that Treasury Secretary Scott Bessent said: the president wants lower interest rates, as he told Fox Business on Wednesday. He and I are focused on the 10-year Treasury and what is the yield of that. Now, I want you guys to see the correlation between the 10-year Treasury yield and mortgage interest rates, which is very, very close. As you guys see the yields coming down, the rates also start to come down as well. So they move very, very closely together. And as you can tell over here on September 13th of 2024, the 10-year yield hit a then low of 3.63%, and the average mortgage rate was about 6.11%. Now, that was the low of 2024, and actually that went back to as low as, over the last year or so at that time. And we haven't really seen interest rates that low since. Now, we're not really far off from this level, and I do believe that it is going to be somewhat achievable by the summer market. Now, this is just my personal opinion. This is not, doesn't really mean anything. That's just kind of what I believe. But just to show you guys that I'm not biased, this is the opinion by Fannie Mae. Now, Fannie Mae forecasts that their rate has been revised upward compared to last month, given the rise in interest rates since our last forecast. We expect the 30-year fixed mortgage rate to an average of 6.8% in 2025 and 6.5% in 2026. Now, moving on to the Mortgage Bankers Association, they're forecasting the 10-year Treasury yield to hold between 4.5% and 4.6% through 2025, which means that they will kind of be matching the similar forecast of interest rates as Fannie Mae, so roughly about 6.5% to 6.8%. All right, guys, so that's basically what's going on with interest rates. So really cool to see that these rates are starting to come down. Be on the lookout if you are buying a home. Rates are going to be much better compared to obviously what was going on last month or 2 months ago, or even heck 3 weeks ago. Be on the lookout, guys, if you are a homeowner already and you bought a home in the last couple of years and you have a somewhat elevated mortgage rate. As I showed you guys in this video, there are really good rates available right now, and you could be benefiting by taking advantage of refinancing. That is a tool that you have. So make sure that you are on the lookout for that. Let me know what you guys think about the video. Thank you for watching. I'll see you soon.